Well, good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Wednesday, and we're at the 27th of December, 2023, 5:10 p.m. Central Time. I'm putting this out early as my wife's dragging me out to dinner. You know, it's that end of the year time. I'm sure you're going through what I am, and away you go. All right, so I'm going to do that early, and I figured I'd put this out. Admittedly, I haven't been overly aggressive in the markets. I rarely am when volume thins out for a holiday like this. And the reason is I've learned over my many years in the market. I became a registered broker in '69, so that should give you an idea. I've done this, cut my teeth on the trading floors, runner, member, done all those type of things over the years. And you learn to stay out of harm's way and then come back into the market in your terms right after the first of the year in a more aggressive fashion. That doesn't mean you can't hold some positions, but you're doing more position trading at this time of the year than you are the normal swing trades back and forth, and you have to consider that. North Korea tonight has put all of its forces, military, nuclear, everything in the world, on alert for the aggressor, the United States, and they're telling their country to get ready for potential war. Okay, I guess that they don't have themselves in the news enough, so that's what they want to do. The biggest factor, and people should understand, is you'll say they have a nuclear sector. They definitely do, and they have a treatment plant. They've just created one. It's operational. I write about it in tonight's written report for all of my research people. So it'll be on the website and everywhere else you go, and I cover it in pretty good detail. So take a look at it. I think you want to. As for the gold market, well, you can see it's still fighting a stock market that's never ending to the upside, all of November and for the most part all of December. And it's still doing well. It's at 2090. Yes, it got up as high as the 2150 area, then gave that up, but it was over the Bollinger Band at that point. And if you understand Bollinger Band theory, it's an algorithm designed to keep the market trading within bands 95% of the time. It can step out for that 5%. You tie it together with momentum, and you can take that 5% and crack that down so you get a much higher percentage as to when it's going to ride the band and when it's just going to turn away from it. It's fascinating. I teach that in my enhanced Bollinger Band course. I tell you all, you might want to go to the website, iraepstein.com, and over this remaining part of the holiday, get that course for yourself. Take it. It'll take you 3-4 days, and all of a sudden you're going to go, whoa, what is he up to right there? And I think you'll understand what I'm talking about. All right, dollar. I just did a dollar report 2 weeks ago tomorrow, calling for a break in the dollar, at least through year end. You tell me you're not getting that. Wouldn't surprise me if you crack the 100 level sooner rather than later. When we take a weekly chart of gold closes only, I put on it the 18-week moving average of closes, and the market's over it. So my bias to the market, when I'm over that number on a closing basis, is bullish. When I'm under, I'm bearish. Why is that important? Because I take my other signals, and this is a filter that if I have a sell signal says, hey, go with it, or a buy signal, go with it. Then I take a look at the daily bar chart. So if we take a look at the daily bar chart, the market was capped at 2150, the correction low, back into the 1990 area, and you've made a good 50% correction. In the meantime, do you see these brown lines? Those are called swing lines. I developed this when my son was about 12, 13 years old, so that he could walk into a room, he's by the way near 40 today, and tell all my friends, I can tell you what a chart is. And we'd walk in, he'd take out a pencil and he'd draw these lines. He goes, it's in an uptrend until this happens or that happens. If you're long, your stop should be one tick under. And people would laugh. Became a heck of a chartist. Because if you watch television, that's what you hear all the time. If you're watching financial TV, if you go on to different videos, a trend is made up of, if a market's trending, in an uptrend, higher lows, higher highs, downtrend, lower highs, lower lows, and no trend in some manner has a higher high and a lower low. It could be back and forth like that. Well, this is still very much an uptrend unless and until the market wants to get back under the 2065.10. I knew that there was something there. I thought it was a 9. I'm going, what is that? until it takes out 20, 65, 10. Where's the resistance? Well, it's not one of these moving averages. Here's the 18-day average. This is the 200, and that is the 100. So it's not those, which means it's probably a Bollinger Band, and that number's right here, and you tell me where that market's going up to and where it's fighting its battle. But you then time momentum. Is this embedded, or is this an overbought market? Embedded means the market gets over the 80 or the 20 level and goes sideways for a certain amount of time. You might say, Ira, how come my slow stochastics don't look quite like yours? It's because I modified them. I studied slow stochastics with George Linn, the developer of them. Used to have him on my TV shows. I cannot tell how many times he was in my office. And I laid out many times what I thought this was my version of what I did. And he invited that. And I said, George, here's your formula. If I do this, I can develop an embedded reading more times than not. And here's why I think that's important. I went through it, and it became a mainstay of the way that I like to look at approaching trends and the length of a trend. And what you've been doing recently is this was embedded. And you can see the power when the market went up. When it lost it, you got the correction. And since then, you've been basically back and forth, not embedding. Also, you're caught in the Bollinger Band in the big swath. Look at the black dashed lines. Pretty much sideways action right now. When I look at the difference of gold versus silver, the gold-silver ratio, when the market is over the red line, the 18-day moving average, that tells me gold is stronger than silver. As the numbers go up, you need more ounces of gold to get 1 ounce of silver. When I look at silver, today's action in silver was important. It's an outside day up. I created a course for outside days, and the reason is you get them all the time. And if you understand how to work with them and what they mean, they can be a continuation pattern and/or they can be a pattern that if that price is taken out, certain events take place. It has to happen within a certain period of time. I teach all that, and away you go. Right now, the trend is higher lows, higher highs, but like the gold, it is a very overbought market. Copper's overbought. You tell me where the market stopped on each of these rallies. Take a look. So if you're a trader and you're coming in and you're coming out there and you're coming back in on breaks, or you're looking to come in on a break for your first longer hold position, how do you do that? Well, when you're embedded, I've come up with the technique and have it. I teach it. And you're trying to hold it until you get up to those numbers again. And you hit Bollinger Bands on a regular basis. In the platinum, go to yesterday's tape. And I said, if you put a gun to my head, which market do I want to own? Which one do I think is the strongest? I said platinum. And the reason is embedded reading. None of the other metals have that. It had come down. You tell me what it did today. Right to the Bollinger Band. So you look for these type of things and you hope that the market does what you think. Nobody walks on water. Nobody's right all the time, and no technique is right all the time. If you're looking for that, get away from futures, get away from stock trading and charts. Maybe become an investor. Don't become a trader if that's what you're looking. But if you're a trader, you're looking for these high probabilities. Now here comes the dollar index back down, riding the Bollinger Band. Do I think it'll stay under it? No, because only 5% of the time do you do that. But there's nothing here bullish. The bias is down as you're under the 18-day average, and the momentums are all down. I am in the bear camp. Now, you might want to use this time, as I said, to take one of the courses, but this is what we offer on our free offer section at iraepstein.com. And when you look at all this and you put it together, all you need to do is give a click on any of these blue areas, and there's more than this. They drop down through here, and get yourself set up for the new year. One of the things I would do if I'm you, price counts. You're not going to get them from other firms. Read about what they do, where they're at. I even put together a free, simple course that you can get from our brokers to help you work with them. And you could even, on our charting software, plot them. You won't be able to plot these on your own charting software. We don't give away and we don't license that out at the Linn Group. So you're going to have to use our software to get it. But we also publish these charts every weekend. And during the week, we update them and we send them out as well. So you get a free trial to it. If you get my research, you get involved in it, it's included, things of that nature. I'm Ira Epstein. Move your cursor to the top here, by the way. You can do that at any point. There'll be an icon that'll take you right to the site. Otherwise, iraepstein.com, free offers. Take care.